Another interesting aspect is the asymmetric kind of performance of Bitcoin. If you go back to the last 12 years of Bitcoin, in 9 out of those 12 years, Bitcoin has been the best performing asset. In the other 3, it has been the worst performing asset. So why is that relevant, or why is that interesting? If you come in now from the portfolio theory, you want to have a portfolio completely diversified. You want to diversify it over asset classes, you want to diversify it over geographics, and also over time. And Bitcoin as an asset that is completely uncorrelated to all the other asset classes is extremely valuable to that, because you also want to have your assets uncorrelated over a longer time frame. When you blend in the volatility aspect and the performance, you usually don't mind certain volatility in a portfolio if it goes to the upside. And Bitcoin also fulfills that role. So if you have a standard portfolio where you have a fixed allocation of gold, of equities, of bonds, fixed income instruments, and you start to actually take away 1% of the equity allocation and put it into Bitcoin, what happens is that the Sharpe ratio goes up, basically your return per unit of risk, and the annualized return. So also from a portfolio perspective, just simply from the theory and trying to diversify a portfolio, it's almost impossible to ignore the effects of Bitcoin nowadays. That, of course, applies to your private portfolio, but certainly also to what governments are doing.